when how I started my own trading plan and how I was not sticking to it, having difficulties to actually following it, then developing something, falling off short, developing it again, and trying my best to kind of keep up with it. So today's session, we will discuss trading plan in depth, and I will walk you through what I do personally in my own trading plan, how you can implement the same things that I do to find the success that you're looking for. I'll go to Dr. Joy so she can talk to you guys a little bit further about it, and we'll carry on.
Great, thank you, Mo. So just when Mo is going to share his screen with everybody in a little while, and just to talk you through what he considers when he's actually developing his trading plan. But the whole purpose of a trading plan is to enhance your performance. And so if we think about any activity that we engage in, we typically have a plan for how we're going to do it. It could be as simple as booking a holiday, which means that you're going to research flights, you're going to research countries, you're going to have a budget, you're going to decide what you want to do and what you don't want to do, and then you're going to make a plan accordingly to have the holiday that you want. And so everything in life requires planning. You plan your day. And if you have a plan for the day, typically your day will go well. And if you don't have a plan, your day may not go so well, or you don't get through your to-do list. And so we're trying to help you bring some degree of discipline and informed decision-making to your trading process, which for a lot of people can be very driven by emotional thinking. And so when we have a trading plan, we're trying to solely, before we ever start trading, use our rational brain to engage with lots of technical analysis and lots of factual information, and using the learning, the know-how from your trading courses, coupled with then daily engagement with technical analysis and skills, develop a trading plan so that you have to worry less when you're trading. So that's the reason why, from a psychological perspective, stay more with rational brain than emotional brain. And so if Mo is happy to share his screen, lots of people that I talk to tell me that they're trading and the trading might be improving, but not as well as they'd like. And very often when I ask, do you have a trading plan? The answer is no. So that's one thing I suggest: work with your coach and start considering opening the discussion about a trading plan. They're not sure what a trading plan actually contains. And then even though they have a plan, that this is a separate topic to do with discipline, they have a plan and very often don't stick to it, which is a separate discussion. So today we're going to talk about the plan, what it contains, and what you should be considering when you're developing a plan. Thank you.
So thank you very much, Dr. Joy, for that. I will be sharing my screen with you guys. Let me see a lot of yeses if you can see my screen. Iman, can you give me a post? Can everyone see my screen? All right. So this is the We Fund You Trade platform, as you all guys are familiar with. When it comes to a trading plan, this is the most important thing that you have to do with your trading process, because without a plan, you're going to get random results. Random results going to lead to losses or random winnings, and you're never going to beat your targets. So what I do on a day-to-day basis, every day in the morning, the first thing I would do is go to my calendar. Calendar is extremely important to understand what major news you're going to expect that will be released on the markets, so you can know where to expect volatility, which assets, what pairs, and kind of understand or draw your analysis around the fundamentals of the market. So for example, today we had the ISM services PMI. So what I like about our economic calendar, if you click on it, you basically get access to high impact news, medium impact news, and low impact news. You've got 6 high impact news releases for the day, 12 medium impact, as well as 19 for the low impact ones. Usually the low impact ones are not going to be very necessary to look at because they're not going to move the markets the way you want. But for the high impact and the medium impact are the ones you need to focus on. So what I do in the morning, I wake up, as mentioned in the past, at 4:30 in the morning. And basically, I do my meditation, my breakfast. Then I go on to look at the news, watch Bloomberg, along with following on the economic calendar to understand what is happening. So if we click on the high impact news right here, so we've got GDP, gross domestic product for Australia. We've got retail sales for Europe, Bank of England monetary policy report hearings for the United Kingdom, Bank of Canada interest rate decision, which was announced today, just about 2 hours ago. And you have Bank of Canada rate statement, as well as the ISM services PMI. So the tricky part today is that the ISM services and the Bank of Canada interest rate decision was released both at the same time. So people didn't really know how to react to the markets, whether it was the US dollar or the Canadian dollar. People do their own predictions and their own anticipations, but when you have things like that, you typically want to wait out the news and then execute your trades after the news. We always advise our clients that trading the news, it might work out for you and you make tremendous amounts of profits in a short period of time. However, as a trader, for longevity reasons, you want to focus on trading after the news when things have calmed down, the data's out, and then you have a clearer picture of where the market is heading. So if you click on ISM services PMI, for example, it gives you a description. So this is extremely important for you guys to kind of understand what that typically means, how it's going to affect the markets, and which sector of the market is going to get affected by that. We also show you what assets does this event affect. So not a lot of platforms actually give you access to that data. Here with We Fund You Trade, we're looking after you. We're trying to help you out with every single bit of details to get you to where you want to be. So we're simplifying everything. The only thing that you need to do is actually stick to your plan, develop the plan and go on with it. And this platform simplifies everything, as we mentioned. So what assets does this event affect? What asset are you looking at? Are you going to be trading the euro dollar? Are you looking to be trading sterling against the dollar? Gold, silver, US 30? What asset are you going to be trading? And that's how you can decide for yourself where to look. So for example, I trade cable, which is sterling against the dollar every single day. It's my favorite currency. We live here in the United Kingdom, so it's our currency, and we kind of like are up to date with what is happening with the central bank in the United Kingdom. What are they releasing and what are we looking for? If we click on GBP USD, it gives you the data in the past, what happened in the past, and what is anticipated to happen in the future. So when you get access to the data in the past, you are better equipped to handle the future. And then we also give you the news sentiment 1 day before the news. So this is the retail traders. What were they doing before the news? You had 82% of people selling before the news and 18% of people buying. Hence, today, we've seen that on the news, markets actually went up. So the 82% of people lost their money. 18% who were buying before the news profited on that move. After the news calmed down, price actually started going in the direction it was supposed to go to. We also give you a lot more additional data, such as in the hour, price moves around 30 pips, which is the move that we've seen today. On the day, it moves 73 pips. And on the week, it moves 151 pips. Over a month, it moves 282 pips. Additionally to that, that's not everything. We also give you the news sentiment, which is the psychology of traders and what they typically feel before the news is released. In addition to that, we also give you high quality news sources provided to you by banks, where you can read them before the news and understand what to typically expect if you want to deep dive into the fundamentals of that news. And you can do that for every high impact news. It's all detailed there for you, making the job for you easier rather than look at 1,000 mainstream media news channels and then go on and do your analysis. We have the economic calendar here for you. After that, after I do my economical calendar analysis, I would go to the charts. For example, choose the asset that I want to trade, which is sterling against the dollar. And then there you have it. We've got my favorite asset now right in front of me. And then you can add in your indicators, the strategy that you use, and then choose the time frame that you're picking for your trades. So if we're looking at the short time frame, so we can understand what is happening, you can see that today we had a move to the upside, then it broke lower, sideways movement, created a lower high, and then a lower low, created a lower high, a lower low, sideways movement again, and a lower high. So the market is obviously trending lower from a technical analyst perspective. And when you see something like that, so you had a move right here, broke lower. So you can think of it, if you draw an imaginary line right here, it break of structure. So we broke this structure right here. And then we had a retest on the break of structure, which aligns perfectly with the 200 moving average, and then a move lower. Another break of structure right here, a retest on the break of structure, another move lower. So you could have had 3 profitable trades today if you were patient, following your trading plan and following your strategy. This is how simple it is. Obviously, it looks so simple. When you're doing it at the time, you have to be thinking in a rational way, executing proper risk management, controlling your psychology and your emotions, not thinking that I want to make it out of one trade and become a billionaire. These things don't happen. And if you see them on social media, just try to crop that information out of your mind, because it's only going to hurt you in the long run. Take every trade by itself, try to maximize your potential out of each trade individually, and then go on from there. So that's when you do your analysis. So in the morning, I would look at the chart early in the morning, check what is happening, understand the movement of the market. And then afterwards, I would look again at around 11:30 p.m. I would look again at 1:30 when the news typically gets released. Today at 3, we had the major news releases. And then you can catch the move, or you can catch the move early in the morning. It depends on you. You can also look at it from a perspective of, we had a touch right here, we had another touch right here, and we had another touch right here. Typically, when you have a resistance level forming where it touches first one time, another time, and a third time, and it's not breaking higher, you expect that this is a strong ceiling of the market, and the market is just going to drop it lower. So there are a lot of ways you can think of the market, a lot of ways you can analyze your chart, and there's not one right way. So I may look at a chart and see that there's a selling opportunity, and Dr. Joy, on the other hand, she could look at the same chart and see a buying opportunity. There's no right and wrong. It's based on probability, and you always need to think of risk management first, trading plan, which includes risk management as a core value of it, and then your analysis, your fundamental analysis. Boom, you have a trading plan. Outside of your trading plan, you need to be sleeping early, eating healthy food, exercising, waking up early, because all of these things, all of these good habits will add on to your quality of trading. And I'm going to move back to Dr. Joy to discuss this further from a psychological perspective. If you guys have any questions, let me see these questions popping in the chat.
Beautiful. Thank you, Mo. So I guess what I'm thinking as you're talking through all of that is, I think there's reverb there a little bit, is how when you're doing all of your analysis and you go into these absolutely wonderful sources of information, firstly, you're starting to develop a plan and you're learning about trading, and there's all of this amazing information available to you. How do you not get overwhelmed? Because whilst you open up each of those little blocks, and it's certainly this amazing resource, it's like a library at your fingertips.
Yes.
But what advice would you have for people in terms of to get used to engaging with platforms like this with the information, and what would help them, do you think, to just take in what they need?
Yes.
Because I'm conscious I believe, trade the same currencies every day.
Correct.
And some people I speak with tell me they trade different currencies, different markets. And so there's a lot of newness every single day.
Yes.
So what's your experience with learning how to engage with the information that's available?
Yeah.
And then what advice would you have to people in terms of maybe using the same strategy, same market, same time daily as part of their plan?
Yeah.
That is a brilliant question. And to answer that question, when it comes to focusing on different pairs, just think that you're confusing yourself. If you have to do one task at a time, you're going to do it much better than focusing on 1,000 ones at the same time. You have so many assets, and each asset has a different psychology to it. Each asset has a different fundamental that is released to it. And you can't also trade, let's say you're focusing on one trade, you can't be trading that throughout the whole day as well. You need to have a time in the day where you go in, and that is when you execute your idea, you put your stop losses, your take profit, exercise proper risk management, and just focus on that. It's either going to go to your stop loss, which is the worst case scenario, or go to your take profit, which will add on more money to your balance. So why would you want to execute so many trades throughout the day, look at so many different markets and confuse yourself that way? You can see also a lot of people confusing themselves with different indicators. So they add 5 to 10 indicators, and then it becomes extremely difficult to read the chart and understand what is happening. This indicator is telling you something, and this other indicator is telling you to sell. And then another indicator is telling you to buy. So now your mind is like, one thing is telling me to buy, the other thing is telling me to sell. The price, I don't know what is it saying. And then you're confused and you just want to execute a trade for the sake of trading. When it comes to executing a trade for the sake of trading, what I would advise people is to stop for the day. You need to execute a trade because you have all of your trading rules getting implemented. And that is why you're opening a trade. You can justify the reason why you're opening a trade. And if you can't justify why you're opening a trade, it's best not to trade for the day. Also with this platform, you can, so for the purposes of keeping track, if you're following your strategy, right now, if we click on the ticket order, which is something I use every day, I'll use my risk, my stop loss, my take profit, and then I type in a comment. A lot of people move past the comment, but my trading strategy requires me to do 1, 2, 3, 4, 5, 6. Then I will mention in the comment. So for example, 3 touches on resistance, and then prices under the moving average of 200. Therefore, my bias is to sell. I'll just type that in the comments, execute the trade, and it gets saved in my journals. So if I go to my account history, if I go to list, you will find on the side that you have your comments saved. I will not be showing you my own personal account for, regulation reasons, because I don't want people to be copying me. But this is the account that I showcase to clients. And then you can use that tool to just simply, type in a comment, save that, and execute your trade based on your own idea. And then once you see that you're following that strategy every single time, always having the same comment, you can go back and check how likely the strategy is working out for you. If it's not working the way you expect, then you can look for something else, do more tweaks in your strategy, and implement something better or something that works better for you. So what works for me might not work for you. What works for Dr. Joy as a trader might not work for you. Each person is different. There are scalpers, there are position traders, there are day traders, there are swing traders. It depends what type of a trader you are, what strategy you follow, and then type in a comment, keep track that you're executing the same trade over and over. I want to challenge all of you guys to do this thing. Open 50 trades following the same strategy and check how likely the strategy is working out for you. Do not go in the loop of searching for something else. Even if you lose like 3-4 trades, at least you know that my trading strategy can give me 3 or 4 losses in a row, but then it could give me 8 wins in a row. So that's how you understand how likely your strategy is going to benefit you percentage-wise and how likely your strategy is going to work for you. Pick times in the day when you're trading. Do not trade throughout the whole day. That's a noob mistake. That's a beginner mistake that I've done over and over and cost me a lot of money. So in order to avoid that experience, make sure that you have a time, you have your trading plan, your fundamentals in place, your technicals in place, your risk management, which is the most important thing, is in place. And your psychology in check. You're not being emotional. You're not having a lot of outside noise, affecting you. Your life is fine. You did not fight with your colleagues and then you want to go and revenge trade. Make sure that you put your trading on the side. It's your own business, and do not correlate it with other things. Once you have that, then you're developing the right trading plan for your trading purposes. And then the outside things that you do in your life also can affect your trading plan. I hope this answers the question.
Yeah, that's absolutely fantastic, Mo. And I'm just wondering, everybody who's listening, if you just want to type into the chat just for now, we're talking about having almost like, we're putting structure and process into the activity of trading. So Mo, as he was talking there, is talking about having focus. And I'm wondering, everybody who's listening, do you feel that you approach your trading in a focused manner, in a systematic manner? And then there's this word discipline, in a disciplined manner, because when Mo is taught, we'd love for you to share your answers or thoughts to some of those questions, because really when we're trading, we need to be approaching trading like it's a job. And for some people have given up their day job, and trading certainly is their job. And then for other people, they have a day job and they're trading alongside that. So when Mo is talking about, checking in with yourself before you trade, you're trying to check in with yourself and acknowledge any interferences, such as maybe I've had words with a work colleague, or maybe there is a problem in my other job that's causing me a little bit of stress. So it's about acknowledging what's going on around me from a psychological perspective that could be influencing how I'm feeling about trading before I even start, how much effort, how disciplined I believe I can be today. And I guess Mo was talking about focus in different ways. So whilst there's lots of information available, and especially we're looking at the We Fund You Trade platform today, it's like there's lots of information available, and you just make a choice in the way you want to use it. And certainly, if you're starting out, focusing on similar currencies in each day allows you to become familiar, to build a relationship, to, as Mo was saying, see patterns. And as you see patterns, you're beginning to become familiar with the landscape. And all of this feeds into feeling a little more confident gradually. It's a process. It's not going to happen overnight. Confidence building, Mo has mentioned many times, has happened over years. It hasn't even happened over weeks or months. It's years, because he's evolved as a trader. He's evolved in how he acts as a trader, how he engages with trading. And so for everybody listening, I think what we're taking from what Mo is saying about a trading plan, it's, access the relevant information. So there's focus. Decide what you're going to trade, again, adding focus, and what market you're going to enter. And then when you're doing all your technical analysis, you're starting to add focus by taking that information and inputting it into a trading plan that you're going to follow. And I guess if you're doing all of these things, you're approaching your trading in a disciplined manner, because you're about to enter what we could say is a volatile environment. So you're trying to give yourself some degree of certainty, or at least a framework. And I guess I kind of refer to this framework that you're developing. It's almost like your how-to of trading, how I'm going to trade, which is relatable almost to policies and procedures in a company. And if you don't have a how-to, as in a to-do list, a trading plan that you focus on and engage with every day, you're approaching your trading in a very ad hoc manner, which increases the possibility of your emotional brain that we've mentioned many times, kind of flipping the switch per se of your rational brain. And if you flip the switch of your rational brain, you're starting to make your decisions from emotional brain. And that's very often where you'll get things like revenge trading or deciding to throw your trading plan in the bin and step into trades ahead of time or stay in for longer. So what Mo is talking about, if you haven't been thinking about this, and very often the people that I'm talking to are telling me stories about themselves trading and the fact that they're trying out multiple new strategies every day or going into different markets or trading different commodities every day, and they're lost and they don't feel confident. They haven't heard of a trading plan. And so I guess what we're trying to do then is help them put a little bit of structure or gain a little bit more insight in terms of how I can actually enhance my trading skills. Yeah. So I'm trying to be more disciplined as I've had a few losses. So I just see this here. Somebody's just popped that in. Do you have any advice, Mo, if you've had a few losses?
Yes.
How do you manage that experience? So maybe I've had 4 or 5 losses in a row. How do you manage your mind? What do you decide for yourself if that happens? Because it will.
So what I would say for a person who's trying to be more disciplined as he has a few losses, think of losses as a journey to learn more. For me, when I would have losses in the past, I would beat myself up over it. Just thinking, oh, my trading is not working, my strategy, my psychology, everything is like all over the place. Now, when I have a loss, I think of it as an opportunity to go back to that loss, analyze it. What have I done wrong? What could I have done better? And how can I try not to implement the same mistake over and over? With that being said, even if you do that process, you will still have losses because the markets is based on wins and losses. So you're not going to eliminate losses fully out of your trades. You will have losses, but the way you control them, the way you manage them, and the way you take them as a learning lesson will bring you back up as a better trader. Do not feel like it's something against you, because sometimes in the past I would feel like the market is against me. Oh, I've lost 5 trades in a row. They must be looking at my trades. And like I have all these random thoughts like in my head. However, remember that you're trading amongst millions and millions of traders on a daily basis. So the market is not going to pick you personally and be like, I want to make this guy lose. If you're wrong, you're simply wrong. You have to accept it, move on. How can I educate myself better? What can I do about this losing trade? What have I done wrong? Did I follow my strategy fully? Ask yourself these questions. If the answer is no to one of them, then you know what is the source of that loss. And I wanted to also mention one thing about what Dr. Joy was saying about trading, multiple pairs and all that. There's a saying in the market, which is a bit cheesy, where one pair to millionaire. So, if you focus on one pair and like try to make it a millionaire out of just one pair rather than focus on a trillion things, it's just better for your psychology. It's easier for you. Maybe when you master that pair and you're really good at it, you can add in another thing to focus on. And then you master 2 things, you can add in a 3rd thing. But I wouldn't add more than 5 things. Even now, after trading for 10 years, I literally look at 5 things and that's it. I know people who have way less experience than me that look at 40 or 50 pairs. And how are you going to make the right decision if you're looking at 40 or 50 things? It's just so difficult. So yeah, don't take that loss to heart. Think of it as a learning experience and grow from it, and you'll find the wins ahead of you.
Lovely. So that sounds like a very focused approach and lovely advice in terms of preventing the overwhelm and allowing somebody to actually be able to appreciate their process, their progress. If I'm in the same market with the same, I'm trading the same things every day, I can gauge my own progress. I can gauge if I'm getting better. And as Mo was saying, not trying out too many things all at once. And I think a key part of of losing is recognizing that if I lose, I'm just on the wrong side of probability. If I win, I'm on the right side. And not taking it personally from a psychological perspective, i.e., if I have 3 wins in a row, it doesn't mean I'm no good of a trader. It's a little bit like speed dating, or people engage with dating apps. And if I meet 3 people and it doesn't work out, it doesn't mean there's something wrong with me. It just means that it didn't work out. Yeah. And so if I lose 3 times when I'm trading, it means nothing other than I lost 3 times. I think a key part of the learning is the reflecting, and you saw Mo inputting, into the platform, and Marie's there saying she likes some of the tools that are on this platform and that the platform is offering, but the platform's allowing you to reflect and to sit with yourself. And it's like, what did I do there? What was the result? What did I notice? Reflecting so you can learn. And then I guess I've heard people talk about back testing, and the fact that back testing is something that has really helped them to develop as a trader.
Absolutely.
And I guess going to ask Mo, because there's your plan that you go in the front door with. And then I guess back testing is at the back door, which is when it's all over and I want to try and learn from the good times and the times maybe that I fell on the wrong side of probability. So maybe we'll ask Mo to share a little bit of his experience with back testing and what advice he'd have about that.
Absolutely. Thank you very much, Dr. Joy. So I've actually, when it comes to backtesting, I've done this for months. There's not one, some people go in a backtesting phase of a week, and then they're like, all right, I know what this can generate for me. And then they go on with it. However, I've done backtesting for a week, and then what you realize that this strategy is working out for like 2-3 weeks. And then you have a losing streak that you don't know where it's coming from. And just you keep losing one trade after the other. And then you don't understand what is going on because you did not backtest your strategy for a lengthy period of time. Even if you want to think about it from a perspective where it can give you some comfort, when you're trading, there are banks that are trading, there are hedge funds that are trading, countries doing exports and imports, a lot of money getting pumped into the markets. So when you think about it from that perspective, you're literally trading against countries, you're trading against banks, you're trading against hedge funds, against other retail traders, against everyone. And when it comes to, banks have a losing quarter. Does that mean that that bank is not good? Of course not. Over the long term, they are profitable. Hedge funds have a losing quarter, have a losing year even. But then they had 3 winning years prior to that, which covers up their 1 year of losses. So when it comes to backtesting, I go through a backtesting phase of 6 months before I, perfect my strategy. And then throughout the 6 months, I'll understand how many losing trades I can get in month 1, month 2, month 3, 4, 5, 6. And that gives me enough data to understand if this strategy is going to work for me or not. I know it's a lengthy period of time, but it requires commitment. It requires discipline. You are not going to get to the trader that you want to be without being disciplined enough to test what you're doing, to follow your strategy properly, to do enough backtesting to understand how likely the strategy is going to work out with you and your personality. So that is the backtesting phase that I go through. Some people do it for a month and it's sufficient enough, but I like to be cautious and careful. I'm a more conservative trader than a lot of risk takers, and that's what works for me. So maybe some of you guys have a different experience and backtesting can work out for you in a couple months or a month or a week. That's how I do it personally. And if you think about it with WeFundYouTrade, the barrier to entry is too little to get access to a lot of capital. So when you're doing backtesting, you can do backtesting on a demo account and then do some forward testing because you have a phase of backtesting. Once you're done with that, you start forward testing your strategy, which can be implemented on a demo account with us, doing stage 1 and stage 2. And then eventually when you become funded, you understand that this strategy works out for me. It got me to be a funded trader. And now I'm just going to focus on it because I can see the miracles it can do. and I'm going to hand this back over to Dr. Joy.
Yeah, no, that's absolutely super and so helpful. And I think what we're learning is there's a lot of time and effort and thought needs to go into your trading. Just at the minute, Mike is there and he's saying his chat's disabled. He's not sure if that's standard. So I'm just flagging that, and somebody might look into that. Not quite sure, but we look into it, Mike, I have noticed it. But I've also there's some comments here from people saying that they had been losing because they were engaging maybe in multiple markets, and think I'm just going to focus on one market. And certainly I think that's the advice that Mo is putting forward this evening. It's like, hold your focus, narrow your focus, and become familiar. It's like, a bit like social media, I guess. You can have lots of friends, but do you really know many of them? You might know 2 people really well. And so I guess it's the same with trading. It's like there's so much choice out there. You literally could change your pairs every single day. But if you want to build familiarity, confidence, and like we were saying, potentially allow yourself to begin to see patterns, you're building a relationship with your process that's giving you a sense of know-how. And I think then the back testing is just helping you build more and more confidence. And I think the more confident you feel as a trader, the less emotional brain is going to come in and cause the panic. Because if you're turning up in the same way each day with a to-do list, do your analysis, you're trading your same pairs in the same market, there's a sense of certainty and comfort for yourself, because it's almost like, well, I know what I'm doing here. It's not like turning up every day and deciding it's something new and you have to start from scratch. And that familiarity, surprisingly enough, is what's giving comfort. And the comfort initially might be the confidence. It's what people might experience as confidence. So I think tonight a key message that's coming out is focus. And then I guess the fact that trading doesn't happen overnight, success doesn't happen overnight. There's a lot of time and effort and thought, in particular with the back testing. And a lot of people that I've spoken to have said back testing was actually the key, along with attending some seminars and webinars and undertaking courses, that back testing for them, that was in their own time. Yeah. And much like you're saying, Mo, they spend hours and hours and hours back testing. So it's like, if you want to become an expert on anything, it requires hours and hours and hours.
Absolutely.
Did you think that when you first started trading, or did you think, no, this is going to happen really quickly?
So basically, when I started backtesting, I thought it was gonna happen really quickly. I thought I need to look at it only for a week. I remember purchasing a package of a charting tool where I can do backtesting for an unlimited time. However, doing it for a week did not work out, and I lost money. And I went back and analyzed the trades, and I was expecting that I was following my strategy fully. And then I realized in the backtesting phase, I was doing something different than what I was applying when I was actually forward testing. That led me to do even more backtesting. And then I did backtesting for a month, and that didn't work out for me until I've actually said, I'm not touching the market. 6 months, full backtesting. Afterwards, let me see where this is going to take me. And when I did that for 6 months, understanding all of that data throughout those 6 months, the losing streaks, the winning streaks, sticking to the same strategy always, it just clicked. It worked. Now I trust my strategy. As you said, it builds confidence. And also, I always think of myself that I am a student of the markets, regardless of how much knowledge I acquire. There's always something new to learn. Do not get arrogant and think that you can make it. Even if you make millions out of the markets, always stay humble. Think that there's always something else to learn. I've always been taking my psychology sessions with you, and they've always been improving me as a trader, even till this day. I would not say that I've done it all on my own. I had a mentor. I have Dr. Joy helping me with my psychology ever since I started. And all of this pays off years later. It's an ongoing journey of self-progression, and that gets you to where you want to be. Nothing happens overnight. You see a lot of overnight success stories, but that is really, the like odds, and I don't want to base my life over odds of 0.0001 of people on earth to like do it overnight. I'd rather do it the hard way, the discipline way, and that it takes more time to accomplish my goals, but then that success lasts forever.
Okay, thank you, Mo. So I'm just wondering at this point, does anybody have any questions for Mo in particular about a trading plan that maybe you want to ask if you're developing your own or just thinking about developing a trading plan? And then the second question, I'm just wondering, are there many people back testing, or is that something that you had factored in as a priority? Because it's a little bit like, you know, any athlete, Tiger Woods in golf, Roger Federer, you know, with our tennis, then we've got rugby teams, we've got the World Rugby starting, the World Cup starting this weekend. So, but after every match, after every game, these people go into a room and back test. They look through their videos, they look through the games, what went well, what didn't go well, what happened at different critical junctures. And so it's really important when you're trading, it's like looking at what can I learn from past performance? What can I learn from my strategies? So if anybody has any questions, so Mo, are you able to share a sample of a trading plan? I don't know whether Mo can actually share a trading plan, but maybe it's something we could consider for next week, yeah. Ralph, for sure, just to see exactly what goes into trading plans, because I guess what we're trying to think here, we have a trading psychology course that is going to be launched in the next month or two. And so we're developing that. And one of the things in it that I'm asking people to consider is the job description. Write a job description for the trader that you want to actually join your finance team. And if you write down the job description for that trader, it's almost giving you a blueprint for how you need to be and who you need to be turning up as. And then in companies all have policies and procedures folder. And I guess what we're trying to do with these sessions is help you guys consider what are my policies and procedures when I'm turning up to trade. And I think a lot of people from tonight are taking away, okay, a good trading plan for sure. I'm seeing from some of the answers here that people are recognizing focusing on, you know, kind of my strategy, what market, what am I trading, and narrowing. So bringing a focus, lovely. And I see there again, what's the structure of a good trading plan? These are wonderful questions because these answers are lovely answers. These answers help us shape what we're going to do over the coming weeks. And so adding focus. And then when we're talking about sitting down, it's thinking about adding focus as well. Am I trading at the same time every day? If I'm trading in the same market, what type of trader am I? Am I a morning trader? Am I an evening trader? And then deciding to have that as a routine, if possible, if you have a day job and your day job allows. So I was chatting to somebody earlier and she was saying, you know, she had a day job, so she couldn't trade during the day. So she was an evening trader, but she'd managed to work it now that she had 3 or 4 days off during the week so she can do her morning trades. Yeah. But everything was about how can I add focus and consistency? And then I think it's really important, I'm suggesting to people that you have a to-do list and you write out your to-do list, that is your to-do list before you trade. Because when Mo is talking about what he does every morning, it's second nature because it has become his normality to get up early, do some meditation to get my mind in the right headspace. He's looking at his platforms, he's gathering his information. But if that's not something that you're naturally doing right now, I encourage people to write it down on a to-do list with as much detail as possible. And every single day, it's almost like a checklist, a safety checklist. They have them in healthcare. You go into a healthcare environment and you go in and you do a safety checklist to make sure that you have all the equipment that's necessary should something go wrong. And when you've ticked through your checklist, you know that everything is in order and you've thought about everything. You do that every single day, even though you know that checklist inside out and upside down. You could probably recite it off the top of your head. Regardless, you do it every day. Absolutely. And having a checklist or a to-do list prior to trading gives you the comfort of knowing that I've approached this systematically. I've read through, I've analyzed, I've looked at, I've gathered everything that I want to. Now I'm going to compile it all in a plan and then go into the markets. What are your thoughts of your to-do list?
Yeah, so when it comes to my to-do list, as Dr. Joy mentioned, it comes second nature to me. When I first started actually, implementing these things, it was very difficult. I would always, have cheat days, not, for example, eating healthy food. I would always like crave to eat something that is not healthy, but then, when you try to implement this over and over, after a period of time, you're always just wanting to stick to what is right for you. It took me literally around 5 to 6 months to kind of build that habit of I'll do 1, 2, 3, 5, 4, 6 in the morning, and then later on I'll go on with my day. So I wake up early, meditate, go exercise, analyze the markets, fundamentals, then have a look at 8:30, to 9 at the markets, technicals, what is it doing? And then afterwards, I go to work, lunch break, I look at the markets again, start executing my trades, put my stop losses, take profits, go back to work, meetings, clients, etc. And I leave the trade running. Just ask yourself, if you open a trade and you find yourself glued to the screen, you're doing something wrong. If you're that type of a trader where you open a trade and you have to keep looking at it, if it goes up and down, you are doing something wrong. And that is only going to create a lot of psychological issues for you where you become fearful, a bit more greedy. You don't know what to do. You don't know how to react to the markets, where to exit. Am I going to stay? Am I going to get out? Is the market reversing on me? The market could go up and down, and then go straight to your take profit, or it could go to your stop loss. It's literally probability based. The best thing you can do to protect yourself is a stop loss, having accurate risk management, and following your trading plan, which I will, talk a little bit more in depth about it next week. I'll show you guys exactly what I do, and then maybe you can implement the same thing if it works for you. I will be answering some of the questions because this session is heading to the end today. We've got Tolga Sakir. Your EMA settings are 200. What exactly were your settings? So I use the 8 and 20 for the daily, and then I use the 50 and the 200 moving averages for the 1 hour, 4 hours, 15 minutes, 30 minutes, etc. 8 and 20 for directional movement, 50 and 200 for execution. And then I think you made a good point earlier to multiple wins don't make you a complete trader either. I absolutely agree with you. A lot of people can have 10 wins in a row and they think that they're the best trader ever. So don't let the wins deceive you or the losses to crush you. Just stay neutral. You're going to have wins and losses. And if you lose, it's not anything wrong about you. It's just the market is not in your favor today. As long as you followed your trading plan and you're not gambling. Mo, are you able to share a sample trading plan? This will happen next week. I'm currently working out on a trading strategy and back testing. So this session is very helpful. Benaya, thank you very much for these kind words. What is the structure of a good take profit? This depends on your strategy and what you are expecting out of the markets. Some days the market is going to give you a 50 pip move. Some days it's going to give you 30 pips, and some days it's not going to move at all. So depending on your strategy and what type of a trader you are, you can basically choose your take profit levels accordingly. Mike Burton, how often should the trading plan be updated? If you have a trading plan that is working for you, I don't think you should update it at all. Maybe you should add more good habits to it. But if your trading plan is not working out for you, then you should find where is it not working, where is it falling short to your expectations, and then do adjustments accordingly. Lubin Lik, meaning trading plan to create habits. Yes, create good habits leads to a good trading plan. Good trading plan leads to the outcomes that you deserve. I hope this was helpful to all of you guys. Thank you again for Dr. Joy. She's always been a great help to all of us, especially me. I know that all of you guys as well. But I hope we can see you next week with an exciting topic, continuing trading plan, and maybe adding more things to the mix. If you have any questions, we have 5 more minutes left. So let me see these questions popping in the Q&A, and we'll do our best to answer it for you guys.
Wonderful. Thank you, Mo. And I guess just summarizing today, then that sense of a lot of people seem to appreciate adding focus. So adding focus in terms of what you're trading and trying to do similar things each day. Adding focus by having a strategic approach to your trading in terms of have your to-do list, tick off your to-do list every day. And then we're still talking about this wonderful concept of a trading plan. Lots of interest in the topic in terms of what does a good plan contain? How often should I update it? How do I use it? What's the structure? What does it contain? And so we're going to continue this topic because I think it's a key part of adding a framework when you trade. And, you know, I guess from everything Mo has ever shared, if you have a good plan and you have a consistent approach, it's game changing in terms of how much you can enjoy the trading process. And I think somebody asked and Mo answered this sense of, you know, not relating. It's really important. If we lose, we don't relate to the losses personally and think I'm not a good trader. But likewise, if I have a number of winnings, I don't suddenly decide to relate to myself as a great trader because the fall is greater than when I have a couple of losses. You're just trying to stay neutral and factual, which is I fell on the right side of probability today. I fell on the wrong side of probability because that's what trading is all about.
Absolutely.
Okay, beautiful. And looking forward to hearing more about trading plans next week.
Yeah. I absolutely agree with Dr. Joy. The last thing that I want to tell all of you guys for today, when you approach trading, think of it as a business. If you're operating a business, you're going to take it so seriously and you're going to be sharp focused. You're not going to gamble away the business money, you know, you're just going to approach it with caution. So trading is similar. If you start thinking of it psychologically as this is my business and I'm going to be super careful, cautious, and just take high quality setups, follow my strategy fully, you're going to have better outcomes with your trades. Because if you're serious about something, it's going to benefit you more than when you're just, you know, playing around. I want to thank you all guys for today. It's always a pleasure having you all here. And we look forward to having another session next week. So stay tuned, follow us on Discord, social media platforms. Once again, special thank you to Dr. Joy. Goodbye.